Welcome back. Let's talk about the currency markets now, where the Indian rupee mirrors the domestic equities, consolidates around the 66.6 mark. On your screen, it has been a flat day for the currency there. Remember, the rupee currency edged marginally higher in the day after a $20 billion financial stimulus from the Chinese central bank arrested the fall in Shanghai stock market. The strengthening dollar, however, weighed on the currency that ended the day at 66.59 on your screens. Abhishek Goenka, founder and CEO, IFA Global, now joins us on the show with his sense on all of the money market. Abhishek, hi, Happy New Year to you. First of all, let's start with how the rupee has been behaving. Yesterday was a two-week close, and we really haven't made any upsides today.
Cut gaya.
Abhishek, we'll try and come back to you because the rupee, of course, has been quite stable during the day. It has been a choppy session, of course, as you can see on those charts. But yesterday, we saw nearly 0.7% of a decline coming in for the currency. That was pretty much the case across Asia because after the Chinese yuan declined to a 4.5-year lows, we did see a lot of pressure coming in for the currency. Today has been a day of stability, especially from that stimulus coming in from China. And not just the rupee. It has arrested the kind of decline that we saw in many of those Asian currencies yesterday. Should get the dollar index on your screens as well because that continues to inch up 98 plus kind of levels for a third straight day coming in for that. Abhishek, hi, if you can hear me back now. What's your sense on the rupee? Because the kind of volatile moves that we saw yesterday seem to have been arrested today, even as the, the cues came in really from China.
Yeah, I think if you look at yesterday's market, I think that was the main driver, the Chinese markets crashing down. And today, if you look at the markets, the Chinese markets went down but ended kind of flat. The European markets are slightly down and the US markets are slightly down. Now, looking at that, I would not say that the markets are very comfortable today, but yeah, the risk of sentiment is still there. But it's not as bad as it was seen yesterday. Even the stock markets in India are kind of flat. And if you look at the global currencies and the risk of sentiment is still there because if you see the US dollar has come down, the euro has been going down, the pound sterling has been going down, the yen has gone strong, which is typically a risk of sentiment market, the yen gets a little strong. So overall, the market is having a risk of sentiment because of which the Indian rupee is also feeling the pressure. But again, if I have to say the markets moved by around 40-45 paisa. Since yesterday now, that is not a very, very huge move. So till the time we are seeing levels of 67 breaking again, I would still say that it is broadly in the range of 66 to 67 with a slight appreciation bias for the rupee. So I would rather look at selling at higher levels right now, at least for the short term, selling the dollars and buying the rupee. Till the time it's ranging in the range of 66 to 67. I think one dip below 66 is possible. Post that, possibly in the medium to long term, we can see levels of 67, 68 again. But for a short term, I think one dip close to 66 looks quite possible in the market.
I want to come back on the dollar index because 99.30 kind of levels there, nearly 0.5% of a jump up as we are trading in the European markets. What do you think is getting that on? And of course, your point is well taken on the developed market currencies because all of them really seem to be slipping down right now.
So as rightly said, the dollar index, if you see the 10-year US yields in the short-term LIBORs, it's significantly gone up. The 1 month, the 3-month LIBOR has become, the earlier 6-month LIBOR. So it's been inching up very strongly. So the US dollar expectations in the market is clearly there's a no-brainer that next year if it's going to be a 3 to 4 hikes in the market, then the US dollar is going to get strong. Vis-a-vis the other currencies which are having a diverging interest rate scenario. So clearly dollar index is going to be a winner. So if you have to put a number to it, I think 102, 103 is what we are expecting at least in the coming 6 to 8 months time with the euro hitting below 1.05. It's already come to 10750 today. Pound going below 1.45. It's already 1.47 something today. So the index is expected to go to 102, 103 levels going forward. And I will not be surprised if we see further higher moves in the market this year.
Abhishek, it would be very soon that the markets would start talking about the RBI policy. Also, the budget is just like less than a couple of months away. What's your sense? What do you see the trajectory of the rupee for this quarter then?
So rupee for this quarter, we are expecting a range of close to around 65.70 to close to around 67.5. That's the broad range that we are expecting. It might sound a little loud because the range is wide, but at the same time, as I said, one possible dip in the rupee is possible. And the higher side, I do not see a very, very significant depreciation unless some real big havoc starts coming in China, which is the main concern. And the other thing which is lurking behind the bush is the oil prices. And since the oil prices have been down and India has greatly benefited from it, if there is a significant up move in the oil prices because of any reason whatsoever, then I think the rupee would again take a big hit. So I think oil prices and China are two major issues which is lurking behind the bush. I think the US thing is already priced in and people know what's going to happen mostly in the next year. But the rest, these two factors is something we need to watch very, very closely.
Closer home, the FPI numbers have been good as we see them yesterday and today, and the inflows are expected to pick up as well because India's story is something that still stands tall vis-a-vis other emerging markets. How much of a strength do you see coming in because of that?
So as you rightly said, the expectation in the debt market is quite buoyant. People are expecting a lot of flows happening in January. Unfortunately, last 2-3 days, markets didn't behave the way it normally behaves in the beginning of the year. But if you look at the history, 7 to 8 years out of the last 10 years, the money typically comes in December and Jan. If you look at the history. So January, we should see some flows, and because of which I think 50 paisa move on a conservative basis, provided we do not see a lot of negative news coming from China, is possible in the rupee. So I think close to levels of 66 is possible in the rupee, provided we see a lot of flows coming in January.
Abhishek, we've spoken to so many people as the year started, and while people say that the best case scenario for the rupee is perhaps 65, on the weaker side, 68, 69, 70 is a level as well, which bankers have come out with on the show. What are you putting out as range for calendar year 2016?
So the house view that we shared last Diwali was 65.5 to close to around 69 to 69.5. This is the broad range for this year with a depreciating bias. Only on the very short term we are expecting the rupee to be slightly strong. But I think from March onwards, I think the rupee will again start its weakening trajectory, and I think levels of 68, 69 is quite possible in this particular year.
Final question, what's your sense on GST, and also where do you see the RBI headed when it comes to the interest rate trajectory for this year?
See, on the interest rates, again, it's a matter of how much money are we getting in the debt markets. That's something which we have to closely watch. Accordingly, the interest rate curve would also shift. Secondly, I do not see a lot of interest rate cuts happening. The expectations were there earlier, but now I don't see a lot of cuts happening, especially on one side when the US is hiking rates. So I don't see a very big move happening in the debt markets. I think 20-30 basis points here and there, and that's going to be the move in the next 3 to 6 months.
All right, Abhishek, has been fun chatting with you. Thank you so much for coming by and giving us your sense on the money market. So that's yet another view coming in from Abhishek Goenka. 65.5, 69.5 is the range coming in for the currency for this year. Watch out, of course, for the global cues from Europe, US and China, of course. That is what would shape up on how Indian rupee and the currency goes ahead from here. With that, completely out of time on the show. Thank you for watching.